What's going on, guys? My name's Kyle. Welcome to the Big Money Mindset YouTube channel. In today's video, we're going to go over some companies that you should be looking out for that are going to be performing well over the next couple of months. We're going to go over things you can do to limit your risk, some mistakes that I made, and also some good moves that I made that is going to be getting me better buying opportunities, potentially tomorrow. So we'll go over a lot of different things. Once again, I want to say thank you to everyone that signed up for the Patreon. The link is in the description. We've had a pretty rough month in February, but I think we can bounce back very quickly. If your portfolio isn't in the red 80-90%, most likely you're buying pretty good companies, that can bounce back very quickly in a bullish market. So you just got to stay patient. I think our patience will pay off very soon. And only if you feel this video gives you a better insight on the stock market, the direction that it's headed. Be sure to subscribe to the channel. I'll be keeping you updated daily with all the growth stocks and spec plays. There's going to be a lot of great information coming out and you don't want to miss it. Let's get into the video. All right, guys, you can see right now the portfolio is down about 23%. I believe at the all-time lows, it was Tuesday. So as you can see, Thursday today wasn't as bad as Tuesday, which Tuesday was really bad because pre-market hit really hard. We were down about $24,000, about 29% at the low. And if we take it off that low right there on Tuesday, we bounced back a little bit, like $5 grand. We were actually doing very solid on the bounce back Wednesday, yesterday. The portfolio was up to 73 grand. We were down only 8 G's. And then Thursday just hit like crazy. And guys, I've been buying the dip like crazy. As you can see, I've activated my margin just in case tomorrow some great opportunity arrives. So I put on my margin of whatever Robinhood allows me to get. Most likely I'll be buying more into stocks. I won't really buy a lot of options with that money. If I spent it all, I'd probably buy like 25 grand in stock, maybe 8,000 in options. So if the buying opportunity comes tomorrow, I'll definitely take advantage. But as you can see, some of the calls, the earliest call I have right now is 2 April calls, and the BFT we bought pretty low. They're doing pretty solid, down $100. And the open door also in May, we're down a little bit on one of the calls. So the only call that's really killing me right now is Apxt. I really like that company. I think April 16th is plenty of time for the company to bounce back to nearly $20 or more. It'll probably be merged by the beginning of April. So this one, I'm down to like 40-50%. We're just staying patient on that one. But besides that call, guys, I'm pretty confident in everything else I have. Everything else is June, July, and further next year. So we have a lot of cushion, guys. That's what I've been telling everyone in my Patreon. Make sure you're buying out May or further right now. Don't really mess with March, April, or May. Just keep buying out further calls on the dips. Always be sure to diversify. And guys, the market is red right now because of like bond yields are rising. There's inflation. There's the retail GameStop trading. So there's a lot of different things. No one really knows exactly what's going on. They just make up different things every single day. You're going to hear something different. You just need to improvise, okay? You need to improvise. I know a lot of people are running low on cash. What you need to be doing if you're low on cash is you need to be selling some of your higher risk plays, the stocks that you don't feel as comfortable with. Sell those and buy, the better companies making big money, the safer companies that I've been recommending. Trim some of your quality stocks that are in the green to buy those dips on other quality stocks that you don't have, so you can trim stocks on green. And you can also activate margin, 20%, okay? I recommend go with 20%. I'm like right now 100% margin, so I'm doing whatever the max is. I don't know if I'm going to spend it tomorrow. We'll see. Most likely I will buy because it looks like we're going to see a little pullback tomorrow. So guys, you just need to improvise. This is how you become successful. You have to buy on these dips, and you got to have cushion on your call options, as you can see. So I'll give you a couple companies that I'm recommending right now that I really like. So guys, we were doing pretty solid as of February 12th, about 2 weeks ago. It's just the last 2 weeks has just been hell in the market. Everything's selling off. So as you can see, we are down 23,000, 27% for the month. So these things can happen. You just have to, once again, just keep diversifying, buying longer call option expiration, and always improvising and trimming where you need to, selling off those higher risk plays, and you will come out successful in the end. So guys, Butterfly Network, this is a disruptive technology company in the ultrasound field. They are tackling an $8 billion market. You can see that this company, has pulled back drastically this Thursday, nearly 16% with after hours. This company hit a high of nearly $27 to $28. I'm trying to buy more tomorrow, especially if it dips back under 18. I will buy very heavily. I really like this company. They have great revenue right now, and we can take a look at their investor presentation. This is a rapid innovation cycle for a better clinical outcome. The hardware has 15% faster frame rates, 20% longer battery life, 15% smaller probe head, 2x continuous runtime, and the imaging is very good from what I can see. And like I said, this is a company that has amazing revenue, and my cousin also works in the healthcare sector, and he said this is some great technology that they will definitely be using for the years to come. We're already getting nearly $80 million this year in revenue, and the upside potential year over year is just amazing. You're getting 77% year over year growth for 2021 and 2022. And just by next year, we're going to be at 137 million in revenue. So this is a company I would be buying right now. If it dips below 17, I'll definitely buy really heavy, and I'm very excited. I've been buying this one in my long-term growth stock portfolio. And of course, we have Apxt. This is APoint. This is a software cloud company, and as you can see, this one has just been beaten down. Started buying my call options around 15 bucks, which pretty much has really hurt my options on this stock. They're down pretty big, but luckily I have a lot of expiration left, end of April, so just being patient on this one. It should merge in the next couple of weeks. But as you can see, this one has been beat down pretty aggressively, 14% in the past week alone. And I did buy this one in my long-term growth stock portfolio, and I will definitely add more if it dips under $12. I've been buying a lot of October calls on this one now that the October call options are available. At first, I was just buying April to see if I can get a little jump, but of course, no one expects these types of things to happen, so luckily we have a little bit of expiration left, and these might bounce back with a little bit of profit in the next couple of weeks. It had a crazy dip Tuesday to 1180, but guys, the good thing about this company with a lot of these other SPACs is this company has amazing revenue. You can see right here, 2020 they did $148 million, $193 million expected in 2021. This company has no debt. They have blue chip customer base across the board. This is one that is a steal right now on $12, guys. As you can see, it's sold off aggressively, just like the Butterfly Network. I'm going to keep buying these dips. I'm going to keep buying October call options for this one, especially now with the sell-off. This is a no-brainer. And of course, we have NEO, guys. This one has sold off $22, or actually about $23 from the high of about $67 for the past 7 weeks. So this one has been selling off for 7 weeks. People are waiting on earnings, and of course, Lee just had earnings today. He did very solid on their earnings. They sold off like crazy. Revenue jumped 39% to $635 million. So you just don't know what's going on in this market right now. Companies are doing amazing outside of the United States, of course. So this doesn't even really have to do with the United States. There's just a lot of United States investors in these EV companies in China. But once again, NEO is the leader in China. They are making crazy year-over-year growth right now, month-over-month records. This one could easily fall down tomorrow to 40 bucks. I will most likely buy one more call option for 2023. These are pretty cheap right now, guys. I got one the other day for like $1,000 bucks. So I'm down on those right now, but as you know, we got 2 years of expiration on those, so I don't really care. I think a lot of people are getting shooken out, a lot of weak hands, and people just don't understand the upside of this company. And I've been hearing that it's following a lot of the Tesla chart, which is understandable because we have a lot of United States investors in NEO. But yeah, this one could definitely hit 40 bucks. I would recommend to buy the dip heavy. I think we might clear up by next week, and this stock should see all-time highs in March. I think we're going to go over 70 bucks to see all-time highs. It just, the market needs to be calm and clear. A lot of companies have been doing excellent. Salesforce just did amazing on earnings. Roku, Li Auto, Redfin. Guys, companies are doing amazing. That's what you're investing in. You're investing in the company, okay? You're not worried about these bond yields and stuff like that, because that's just for, big time, rich investors, adjusting their money, pulling out of these companies. As long as you're buying good companies, you're going to be all right. Just make sure you're investing in companies that are growing year over year. All three companies that I showed you so far are growing year over year. And of course, the last one we'll take a look at is going to be Opendoor. And as you can see, Redfin, it's one of its biggest competitors, just did another amazing earnings, hit record traffic. So guys, you might get good earnings. The company might sell off. That's not a reason to sell, okay? We have a lot of weak hands nowadays inside of the stock market. I'm averaging down. I'm pushing my call options out further. We should clear up in March. I wouldn't be too worried if you have April calls. Just buy further out calls. You could always sell those for a small loss and roll them over. There's a lot of different options, guys. Just remember, you can always trim stocks in the green, margin 20%, sell the higher risk plays if you want to be coming up with more money. And once again, Opendoor has sold off as well. They were at like $38 high, so you're getting a great pullback on this one. Of course, nearly 11-12% today, so this one's selling off hard. A lot of the market's selling off hard right now. Completely understandable. People are afraid. This is when you want to attack. You want to buy that dip, of course. If you made it to the end of the video, I want to say I really do appreciate it. I enjoyed doing this video for you. The stock market is highly volatile right now. Just be sure to buy the dip and average down on companies that you believe in, that are making big revenue year over year growth as well. And only if you feel this video gave you a better insight on the stock market opportunities out there. Be sure to subscribe to the channel. I'm going to be keeping you updated daily with all the growth stocks and spec plays. There's going to be a lot of great information coming out and you don't want to miss it. I'm Kyle. This is Big Money Mindset. I hope you have a great day.